All right. And for this particular session, I have with me Makabelo Malumane, Managing Director, Head of Transaction Banking, Kenya and East Africa, Standard Chartered Bank. And then I have with me Miss Monicah Mugure Ndung'u, Head Payments RPC and Remittances, Ecobank Kenya Limited. And the other panelist, who happens to be the chairman of the day, Mr. Michie, CTO, Solv Kenya. And then we have Mr. Johnson Sequeira, Head of R&D with Innovision. May I please request all the participants to join? There has been a slight change. We were supposed to also have Mr. Thomas Gachi. Instead, we have a replacement. It was Mr. Johnson Sequeira, who's the Head of R&D, Data Scientist from Innovision. All right, so we have Makabelo. Do we have Monicah? I do see Monicah is here. May I please request you to, Monicah, to turn on the video, please? All right, by the time we wait for Monicah, may I please request Makabelo to, because obviously ladies first, please go ahead and introduce yourself.
Thank you, Thoufiq, and it's a pleasure to be here today with the other panelists on the call. Really looking forward to the conversation. My name is Makabelo Malumane, and I am with Standard Chartered Bank based in Kenya with a remit for transaction banking across East Africa. So I'm really looking forward to the conversations today.
You're welcome. Michael.
Morning, everyone. Glad to be on the panel. I'm looking forward to an interactive session.
Welcome, Michael. Johnson, please.
Thank you, Mohammed. I'm in charge of, I lead the R&D department here at Innovision, and we are more focused on digital transformation solutions, primarily for emerging markets, more to do with Asia as well as African markets. Our focus has been to, come up with better digital transformation solutions, as well as decentralized solutions focusing on banking.
You're welcome, Johnson. Welcome to the panel. I see that Monicah's video is on, and so is Monicah's audio. Monicah, have you joined us?
Yes, good morning, everyone.
Good morning. Welcome to the panel. Okay, let's quickly have Monicah introduce herself to us.
Thank you. I'm Monicah Mugure. I head the payments in Ecobank Kenya Limited. I'm really passionate about making payments seamless, frictionless, cross-border and also local payments. And that's what I thrive in. Thank you.
Oh, wonderful. I like that short, crisp, but very, very detailed introduction. You used the word passion and, you said you also thrive. So I'm really looking forward to an interesting panel. All right, so the panel being building globally relevant and competitive economies, right? And I am Mohammed Thoufiq, as you'll already know. I'm the Partnership Director with the International Center for Strategic Alliances, having moderated over 90 panels so far. I look forward to, like Monicah thrives in payments, I thrive in moderating panels and learning more and more about different experts that come from different walks of life, especially from the FSI sector. Now, really quickly, see, the building globally relevant and competitive economies, you need to understand we are going to talk about defining the metrics, all right, of the region and becoming a truly digital economy. I don't know if you know this, until last year, this particular event was called the Africa Digital Banking Summit. Right now, the Africa Digital Banking Summit, just to give you a hindsight, is renamed or rebranded to Connected Banking solely because we are not only talking about digital banking anymore. And I don't know if you heard the question I asked for the previous speaker. Are fintechs a threat to the bank? So if they are a threat to the bank, we do not want to be stuck with the banks. We want to be where the trend is leading to, and hence connected banking. Solely because we're not only here to talk about banking, we're here to talk about how banking is connected with different transformations that we see on a daily basis. Like today, integration of leading technologies like artificial intelligence, machine learning, IoT, any digital transformation is the way forward for any bank, right? Collaborating with fintechs, different organizations, and hence connected banking. We're also going to do a quick bit of an inspection of the proactive, policies and regulatory frameworks, just to understand, are they Can you hear me? Hello. Hey, I'm so sorry about that. I was asking Makabelo to give your opinion on the topic today.
So Thoufiq, I think we lost you for a little bit. You may have to repeat your question. We lost quite a bit. You froze for some time. So just pick up on what it was. Thanks.
Perfect. So what I was talking about is we're also going to discuss about the two tools for banks and financial institutions as a driver of change is one of the discussions we're going to have. However, before I go ahead and begin and weigh in my opinions and let you all weigh in yours, I want to understand from Makabelo, what do you think about building globally relevant and competitive economies, and what are your thoughts about this particular panel discussion?
All right, thank you.
The topic.
Thank you for that. I mean, it's a really interesting topic that keeps us awake from a banking perspective. I did hear the last speaker talking about how banks could be irrelevant in light of the fintechs that are taking over and are more agile. But my opinion is slightly different, right? And maybe it's fitting that this is called connected banking. The certain strengths that banks still bring to the table today, right? Are they still traditional in many ways? Yes, they are, but it doesn't mean that the business models cannot evolve. And maybe that's what I'd like to focus on a little bit. So how do we as banks make sure that we're part of these digital ecosystems and digital platforms without necessarily having to overhaul everything we're about, right? So one of the few things is the partnerships have to happen. We cannot run away from that. The beauty of these partnerships today is we have technologies that have evolved and enabled us to do that a little bit better, right? If you're looking at cloud services as an example, you're looking at open banking mechanisms, you're looking at AI, machine learning, etc. It's all enabling us to do things a little bit more fast. And it's also helping us be a little bit more frictionless in how we engage with, the end client at the end of the day. But to make sure that we're doing this right, we have to be client-centric. So we talk about human-centered design. I think whether you're a bank, whether you're a fintech, whether you're a telco, whether you're just a normal technology company, you have to build with your client in mind. And this becomes even more relevant when we're talking about our African continent, where it's clear that we still have populations that are underserved. It's clear that we're still battling with financial inclusion at the end of the day. So how do you do this? There's different models. One, you leverage on your strengths. You continue offering your capabilities as a traditional bank, but you pivot into other areas as well. And it's nice to see we have Michie from Solv here, because he's actually representing what banks are doing, right? Because this is part of the Standard Chartered family. And it's showcasing how we can delve into new spaces without necessarily having to change the full business model of the current bank. So that's one way of doing it, having an arm of the bank that fully focuses on partnerships or finding new opportunities that they can play in. The second part is some of the services that we offer, given that we are regulated. And if you think about, the variances between a bank and a fintech, fintechs still have a lot of leeway to do a lot of things. Banks are regulated and get certain things right, like, things like sanctions, screening, transparency, and visibility. So you could actually use the utilities that banks are good at to power up other ecosystems that are being provided by other players, whether it's fintechs or other digital platforms that are out there. So my key message really, Mohammed, is there's different models that can be explored by banks. It's not a one size fits all, but the partnership piece is key. And also, who are we solving for? And solving for the client or the customer at the end of the day is what we all need to wrap our heads around and get right in order to be relevant in our market. So I'll leave it at that. I hope it kind of answers what you're looking for.
It does. In fact, I was particularly taken by your first statement that you made about how the previous speaker mentioned that the banks may be irrelevant, and however your thought process is a slight bit different compared to him, or rather, from my point of view, it's complete opposite to say so, right? However, like you very rightly put in your words, I would like to make it very simple. Why go to war when you can shake hands, right? Collaborate with fintechs. Look at Solv today. There are so many SC ventures, from Standard Chartered. It's doing so much across the globe, and it's really commendable. Not like banks are still under the cave, right? It's not like we don't believe in innovation. We want to remain the conventional methods that we were doing, use books and journals to put our word forward. So I very much agree to what you have said. Moving on, Michael, please shed a light on the topic as well.
Thank you, Mohammed. I guess after Makabelo's detailed explanation, probably not much to add on my end. Probably what I would consider is when we're looking at the collaboration, as previously mentioned, we can all leverage against what we're strong at. Banks are known to be strong at compliance, risk management, and one of the key things which banks have that other financial institutions don't have is trust. Banks are well trusted by people, and that's something which fintechs can leverage off of during these partnerships. So there's that which the fintechs would benefit from, is that partnership with banks in terms of trust. And fintechs, how they would benefit the banks is they're able to build a lot faster, they're able to create a lot of access, and they don't use the traditional data points in terms of getting insights into clients. They use anything from social media to certain habits from across your device, and they're able to build new models, which then the banks can leverage off of that. So it has to be a symbiotic partnership.
Very well said. Thank you so much, Michael. Let's move on to Monicah.
Thank you so much, Mohammed. And I'd like to thank Michael and Makabelo because they've brought out the key thing about building globally relevant economies, which is partnerships between banks and other technology advancing companies. And that's very key. So are you able to hear me? Okay.
Yeah, very much. I'm sorry to interrupt. I just interrupted to tell you that, oh my God, the panel doesn't get interesting when all of you agree with each other. But however, I must say I'm agreeing with you as well. So go on, please.
Okay, great. Thank you. So maybe just to add is that Michael has brought in something very key, that customers do trust banks with their data. And so there's those aspects where banks have their strengths, but the best way to enhance these partnerships that we've spoken about is to design accessible solutions to our consumers. And we can do that by connecting with third-party service providers through what we call application program interfaces. So basically, for example, if my bank has a digital solution, we can ensure that we are meeting the need of the customer by making sure that the solutions we're giving them are things they can relate to. Michael touched on that, because fintechs have the ability to innovate. They're able to then tell what exactly do my customers want, and therefore I can curate solutions that fit my customers through my digital offerings, right? And the online offerings. And so also, by partnering with these fintechs and maybe or advancing our technologies through APIs, we're able then to also reach the unreached segments, customer segments, those who are unbanked, because even in Kenya right now, we have so many unbanked customers, and the only way to reach them is through digital solutions. And so through these partnerships then is when we can get to this unbanked consumers or this unbanked population, offer them products that are simple to them, that they can relate to. And even the previous speaker did talk about like farmers, whereby a government is coming up with solutions for farmers, and it needs the support of banks and fintechs and all these technology providers to reach these solutions to farmers. So maybe that's what I'd add to this conversation. Thank you.
Thank you, Monica. Mr. Sequeira, may I ask you to go ahead and weigh in your opinions? I believe you're on mute, Johnson, if you could hear me.
Yes, Mohammed, I can hear you now. I think I lost you for a bit then.
Can we all hear Johnson? Makabelo, can you hear Johnson?
I can hear you now, Mohammed.
Okay, yes, we can hear you now.
Okay, great. Right, so, well, first of all, I should say I'm greatly honored to be a part of this panel and to provide my 2 cents to this topic, which basically is building a competitive economies. And what I would like to believe is that to build competitive economies across regions, we need to give that competitive edge to countries. And it's my opinion that since banking leads the innovation when it comes to transactions and finance, the banking sector is something that could lead this economic growth, whether it was the economic growth of countries or whether it pertains to the region. And that's mainly the reason why I believe that positioning the financial sector or the banking sector as the torch bearer in this growth, in this economic growth, is something that could lead to more, say, global trade, more jobs, more exports, more FDIs, and in turn, more automation. And I think that's where someone like we come in, right? And that's the reason this is my firm belief that to drive, the competitive region, I feel that this should be the strategic approach and a very important concept of any country, right? Secondly, I feel what this would lead to is a more open economy, leading to newer opportunities, building more creative and innovative solutions. And although, yes, I'm not sure if someone earlier did point that out, but this is something that I have heard of, that this would then enable poorer countries or developing countries to basically catch up to the overall progress that's happening in the region, right? Lastly, yes, we should acknowledge the challenges that we face in such an approach. That's basically the benefits that we reap out of this could be distributed unequally across the region, right? And that's the reason I feel a good amount of government support is required. A good amount of government support is required to ensure that adequate and apt positioning of such solutions, whether it's digital solutions or decentralized or distributed solutions, the apt positioning of such solutions is definitely required so that we derive the best potential out of those solutions, right? Of such solutions, whether it's
well, thank you, Johnson. Looks like technology has spoken.
Right.
I could say I could say Makabelo and Michael very much, and so does Monica agree with me because I saw that smile on a broad one. Now moving on. Now that we all agree on certain things, help me understand, especially from let's say a region specific from Kenya point of view. Uh, and I will start with Makabelo with this question, and then we can go on with Michael, Monica, and Johnson again. Help me understand. You said that in fact, I think Monica said why should customers that the customers trust the banks with their data, right? And fintechs are yet to build themselves to a position where one can completely blindly trust them, right? Or some do, some don't. It's again a matter of choice and matter of security, matter of whatever one wants to do with their data. Having said that, do you help me understand? Do you think this challenge of a customer not being able to trust a certain organization with data, or not being able to rely completely, as much as we do on banks, do you think the regulatory frameworks has a role to play in it?
Thanks for that question, Mohammed. And I know it's one that elicits different schools of thoughts, right? And
Absolutely.
part of it is, if we had regulation that was guiding the principles of innovation for fintechs today, maybe we wouldn't have made the progress that we have seen, right? So maybe in this particular instance, so in this instance, I think it might be good that fintechs started the journey and have gotten us to a certain point. However, where we have gotten to now, just in terms of our markets, whether it's in Kenya or in Africa or across the world, is, we have to have fair outcomes for clients in whatever we do, right? We cannot run away from that basic principle. Now, how do you achieve that? Unfortunately, you cannot shy away from regulations. So when we talk about partnerships, it's then not just partnerships that you're looking at, between banks and fintechs and telcos, et cetera. It's also partnerships with the regulators. That how do you ensure that we still have fair outcomes for our clients without stifling innovation and ensuring that we can then have that reach that we want? So are there opportunities for regulators to play in this space and to do it fairly? I think so. Because there's a few things that are emerging that we see. One, data protection is a big one, right? And you could put consumer protection and data protection together, because at the end of the day, it's looking at the customer. Are these players using data the wrong way to serve these markets? I'm sure everyone knows about screen scraping and how that was initially used to service, people who didn't have access to financial services in the past. But when it went wrong, then, the measures that were taken were not necessarily pro the client, right? So they were actually working towards the detriment of clients. That's why you're seeing some guidelines around open banking, especially in Europe with PSD2. Those kind of directives then give a good level playing ground for the players. And then over and above that, whether we like it or not, we have cyber security risks that we need to think about. So are there frameworks around that? I really like that in Kenya, there is a big focus around information and cybersecurity, and banks, for example, then have to have, these types of skill sets to make sure that as we grow and we leverage on technology, we're doing it the right way. And lastly, when you look at competition, right? Competition can go horribly wrong if it is not well regulated, in the sense that you could actually have market manipulation that then comes through, right? So if you're not guarding against that, how do you make sure that people are protected and are not left to hang at the end of the day? So those are some of the things that we need to start thinking about as we put the client first once again. To get those fair outcomes for clients, we have to work hand in hand with regulators, not to over-regulate, but to make sure that whatever we're doing is right for the client.
But I will come back to you with a question. Moving on, Michael.
Yeah, thank you. It looks like it'll always be a tough ask to follow Makabelo, but there, you know, there was a point we had begun discussing when all these digital players and the fintechs came into the market, the question of self-regulation and if it would be possible. And it's good to see that regulators are now creating sandboxes for niche solutions which are being created to see how they would impact customers. I think the role of the regulator and probably the name regulator, and I think the names we use probably also don't do justice. We look at the name regulator and we assume that they are to maintain the status quo. So no new challengers are allowed into the market. But I think the regulator's role is consumer protection. I think that's their first key. By ensuring consumer protection, of course, they ensure that any consequences of any failures do not then impact the consumers to the extent to which they would impact the economy as a whole. And probably their name at this stage, maybe they do need a new name. I think a more pleasing name. And I think also the fintechs and all the digital players who have come in, being called disruptors, also the name didn't suit them well enough, as because that name then also put them into the light of they have come to break things, but they just came to push us a few steps forward. And on top of just what Makabelo had mentioned in regards to the data protection and I think one key aspect all parties would need to focus on is transparency. Not just ensuring that so it's transparency. We need all players need to be well spoken out in terms of why they're collecting certain pieces of information and what they use it for. Not just saying that your data is protected, just give us this information. Yeah, thank you.
Two bits on this. Monicah, are you with us? And she's with us, but I can see that the screen is frozen. By the time we get Monicah back, Johnson, may I ask you to please give your 2 bits about this?
Sure, Mohammed. So I would not have much opinion on this particular topic, but I did hear the viewpoints that Makabelo had mentioned earlier, as well as whatever Michael added right now. I honestly do believe that yes, regulatory frameworks or having a well-defined regulatory framework would definitely is favorable for fintech and fintech solutions. Coming from a strong belief in an open economy, I do believe and I do understand that there are certain hurdles in establishing a regulatory framework within a country or within a region as such. Mainly, the kind of hurdles that we have encountered would be the sufficient availability of technical skills, clarity of what kind of mandates are relevant for which country, and an overall lack of resources, right? So these, I feel, are a few of the identified challenges. There could be more challenges depending on which country we're talking about or what region we are focusing on right now. But yes, it's quite evident that there is a necessity of having a well-defined structure, a well-defined framework for regulations with the kind of innovations that we're looking at in payment solutions or fintech or even in DeFi. Now that's the talk of the hour right now. I feel that having a well-defined framework would definitely help fintech solutions. And it would also then promote or encourage more solution providers to step into such economies and overall ensuring an end-to-end growth. So I'm not entirely sure whether I'm pro or against this, but yeah, so far this is what I feel is my viewpoint.
Well, as long as being a panelist is adding value and you're giving your 2 bits, it doesn't matter really if are pro or against it. And what this brings me to be very honest, is yesterday I was in a discussion with Mr. Nitesh Marcel Singh, who is the Managing Director, Accenture South Africa, for CMT lead, right? He's the Managing Director, and he's basically heading their telco and media division. This is one of the questions that I brought it up to him as well, and this is what we discussed. Like, it is important. In fact, Ms. Phyllis Midway from Microsoft, the country manager Kenya, her and I also had an interview, I think last week, which is on YouTube, you could watch. Even she very much rightly so highlighted the very fact that why like I think Makabelo mentioned that Kenya's been the regulatory framework in Kenya is pretty favorable, which is helping devise a certain advancements, right? So why does people like Phyllis, or why do organizations like Microsoft or all of you choose to work in organizations like the organizations you currently represent in a region where you do, right? You could very well go work in America, you could very well go to South Africa, whichever country you choose to. But, Kenya, for example, like you brought up, is giving regulatory frameworks that are favorable to you, favorable to the fintech, favorable to the banks, and are open to listen to your feedback, right? Open to work with you in different formats. And that is what makes an economy stronger, an economy that you can actually, an administration that you can rely on, right? And most importantly, I think there was an article that I had also read, which was talking about how data firms were hesitant to register with a regulator in Kenya. Have you heard of this at all, Makabelo, Michael, anybody, any of you?
Mohammed, I think you might be talking about the digital lending piece that's ongoing right now, right? And we know that obviously there's a few players that have been licensed in a pool of a whole wide array. And, I'm not an expert in that space because I do not sit in that space. But just learning from experiences that we've had in terms of regulatory engagement, you have to start this with a conversation, right? And it has to be clear what you're trying to achieve as a unit. So for example, as banks or as digital lenders, and also understand where the regulator is coming from in terms of the requirements that they have for licensing. I think we have seen in the past that when it comes to consumers, and they have been engaging with these various players, when things go wrong, they do not know where to go, right? So when we talk about that oversight and a call for true fairness when it comes to clients, if it's lacking, then you're really destroying the whole economy that you're trying to serve at the end of the day, right? If you were trying to bring about financial health and financial wellness to the underserved markets, when you hit those pressure points and they have nowhere to go, that becomes a challenge, right? So in this particular instance, I can kind of understand why there is pressure to ensure that players are registered and they have certain guidelines that they will follow through. I don't necessarily feel it will stifle innovation because I have seen regulated players, whether it's PSPs, whether it's financial institutions, still making strides and bringing in new innovations within the market to address the gaps that are seen, right? So, it's an ongoing hot topic, but I think, there's room to actually do better in making sure that we go back to the principles of being fair to our
absolutely
customers.
One thing is for the Microsofts and the Googles of the world, right? They could actually choose any country or any continent for anything that they want to do. But I don't know if you know this. Microsoft has a development center in Nairobi, right? And they have a development center somewhere else in Africa, in South Africa as well. Google has recently started their research and development center in Ghana. Why do organizations that are leading the digital transformation front, right, choose regions like this? The only reason is that some regulatory frameworks are actually working well for them, right? Some governments, some administration are welcoming them with open arms. Having said that, the report that I was talking to you about, in fact, I tried to pull it up while I was talking to you, and I must tell you, in a very, very disturbing survey, because I remember what I read was that most Kenyan organizations have actually not registered with the data commissioner since listing started in July, right? And the act where it requires all companies to handle or process individual personal data and meet the set criteria. In fact, to process the data, basically, it says that only 19% of the firms in Kenya have registered as data controllers or data processors with newly established office of the Data Protection Commissioner. And having said that, disturbingly enough, the report shows that only 12% of Kenyan firms have submitted data protection impact assessment reports, right? With this, you and I as individuals can sit back and talk about fighting and asking for favorable regulatory frameworks, but at the end of the day, the question still remains, are we doing our part? Right? And Monica, I want to hear you talk about this.
Thank you so much, and thanks for the engagement. I think my mic had gone off the other time. So yes, very true. Data protection is very key. And for financial institutions that follow the regulation set, it's very easy for them to know how to store data, how to process data, how to distribute or publish this data on behalf of customers or to customers. And you've touched on digital lending. So I'll just give an experience in Kenya. So some digital lenders go to the extent of even calling next of kins to say that, Mohammed has not paid us our digital loan. And so they sort of exploit the data that this person, they even access the contact list, so those are data breaches. And so they're able to tell and see, this is your contact list. They send your contact list messages to say, oh, you've not paid this short-term loan that you borrowed, and, and so on and so forth. And now they even become where they're intruding into your privacy, intruding into your contacts list, your phone, because that's what those apps request for access to that. And so, as Makabelo said, there's really a key need to regulate these spaces. So, and the regulation is not punishment, but it's rather to standardize, because standardization brings in a lot of benefit. It means that these organizations or these fintechs can follow set out rules and procedures for fairness to the consumers, even as they try to make profits. Remember, so many fintechs and innovation-led companies are individual-led, okay, and managed, as opposed to sort of like financial institutions where there's a whole organization, a company, a board of directors. There's all this sort of like controls and self-regulation within themselves. But some fintechs, and many of them, and I understand there's the innovation part, but you find that individual-led and managed organizations, even just historically, at the end of the day, some decisions may be made, may not favor all parties or all stakeholders that are partaking in this development. And so, as you've said, in terms of digital lending, yes, those products are good because they're giving our consumers very easy, accessible, fast loans, but also we need to look at the other dangers. And maybe there's something maybe we need to look at, because we discussed data protection, we discussed cybersecurity. As long as there's digitization and digital innovations coming in, there's the risk of fraud, cyber frauds. Okay. And so if customers' data, or if they're interacting with apps that are not properly within themselves, they don't have proper controls to safeguard against cyber threats, then it means they're exposing the consumers. It means that through this app can even expose because you're using, say, phones, my smartphone. My smartphone has my banking app. My smartphone has very sensitive information concerning me. So if one application exposes my phone and the data therein through cyber frauds, because they've not secured their systems properly, because there's no sort of standardization or control. I'll give an example. In the payment space, we work with Swift a lot. And Swift has a set of consumer, what we call the customer security program. So every Swift user has to implement a set of security controls within their core banking systems to ensure that when payments are being sent to and within Swift, in the Swift ecosystem, they are safe. So such regulation and such standardization of controls is missing in the digital spaces, the innovative spaces, the fintechs, and so on and so forth. And then there's the key aspect of money laundering, which I think is what you are speaking to, Mohammed, where you say, why are some organizations like Microsoft and Google feeling so comfortable or trusting that they can work within markets and develop within markets in Africa, like Kenya and Ghana. Well, the reliability is coming in because they can trust that the regulations we are setting are safeguarding against money laundering. We know that money laundering not only brings down an economy, just even our country, it can bring down our country's economy if we were to allow this to happen without any sort of regulation. And there are people who are using these fintechs to support that because they can't tell what are consumers doing within the apps. And so many money launderers are using these fintechs to do the layering and integration processes of money laundering through these apps, through these technologies. And therefore, regulation is very key. It's not only going to safeguard the financial institutions, the customers, but also the country's economy as a whole. Because when sanctions come in, then the country will start discussing other things. When you get international sanctions in your country, it stifles growth, it stifles economy, it stifles business within the economy and even the region as a whole. Thank you.
Well, thank you so much, Monicah, and I actually listened to everything you said, but I was so stuck at the first bit you were talking about. I don't know why. That really caught my attention. So a small time vendor, small digital vendor that is giving you, let's say, a small loan, has access to your contact list as well.
Yes, when they're developing the app, when, like, say you go to a Play Store and you download the app, there are these permissions. Yes, there are those permissions that this applications are asking for that are really in breach of data protection and consumer protection policies and regulations, right? But now the consumer is looking at their end need. I need this loan. But when you're downloading this app, you're telling them, I'm giving you access to my data, my documents, my contact list. And so when I default on the loan, they start contacting Mohammed, Makabelo, Michael, and telling them, Monicah has this loan, she's not paid. Yeah.
And all of this buried under fine print.
Thank you. And, when you say accept this application, and, this is the thing, I just know it's a digital vending because the typical consumer may not have this knowledge that we have here, which we have gained through working in financial institutions and fintechs, right? The end consumer just wants a loan. That's why they're downloading this app. But the dangers therein, they can't tell. And so regulation is very key. As I said, these fintechs may be individual-led. So this individual is developing something to benefit themselves and not necessarily the consumer at large.
That actually answers my questions about why should I trust the bank more than any, random organization that came up yesterday. I mean, clearly, if somebody does that to me, reaching out to people that you know from your contact list, that first of all is breach of your privacy. And most importantly, what of all the esteem that you've built all your life is left if somebody calls you and says, hey, your friend hasn't paid me money, right? Oh my God. Okay. Well, moving on. Johnson, please give us your 2 bits about it.
Right. Mohammed, yes, I think I agree with what Monicah said earlier. And I have heard of that instance where app developers or the solution providers, payment solution providers have resorted to such means, and I would definitely say that's a kind of a default or a discrepancy that or a violation of the consumer agreement that they have, right? And like you said, they hide it within the fine print. They hide such clauses within the fine print, and it's a way for them to get away with it, right? And coming to data security, right? We have to understand that the kind of data that is collected with payment solutions or the kind of data that is generated and collated in the banking sector consists largely of personal identifiable information, right? PII, right? So there is a need for ensuring that proper encryption and proper confidentiality of this data is maintained, right? And the kind of innovative solutions and more digitalization that we go towards, the need for security also keeps increasing accordingly, right? And yes, I do agree there are the security solutions provided by such innovations also goes hand in hand. But at the same time, there are these defaulters, right? Small time payment solution providers. And like Monicah mentioned, the end consumer does not think twice before getting into such an agreement. So that is where a financial regulatory framework would come into picture, which would ensure that whether it's a small time payment solution provider, or whether it's a nationalized bank, they come under under an umbrella of a framework which the government or the institution dictates, right? Second thing is data security. Yes, coming from a background where we deal with such kind of data, we deal with encryption and cryptography pertaining to confidential as well as personal data, right? We implement solutions where we have mechanism to let our vendors access information without actually accessing the data, right? A certain vendor might need to know whether the end user belongs to this particular nationality, or whether this particular user or a consumer is above the age of 18. So we have solutions which would reveal that without actually revealing the date of birth of the consumer, right? Because date of birth is something that is very confidential.
Absolutely.
So similar to this, we do have mechanisms being implemented right now, whether it's in cryptography or in encryption or even in overall data security. But yes, dictating a well-defined regulatory framework would ensure that all providers, whether it's like I said, whether it's a nationalized bank or whether it's a small-time payment solutions provider or whether it's a digital transformation solutions provider, right? All of these would come under this umbrella of having a clean and ethical mechanism or a solution for the entire region or for that particular domain. So yes, I do feel that's the need of the hour. We should definitely not ignore it just because this seems lucrative. Inventing and innovating such solutions, implementing them in markets where it's needed, it does seem very lucrative. But at the same time, we have to understand the costs and we have to pay attention to data security.
Well, thank you so much. Michael, I want to ask you, do you have anything that you would like to add to this?
I think the topic has been well covered by my fellow panelists. Yeah.
Being a security professional yourself, CISO, in fact, I must tell you, this was very, very interesting, especially learning certain details of how data can be used against you, right? And clearly, but one thing I wanted to understand, both from you, that is Monicah and Makabelo and Michael for that matter. Now, these lenders, digital lenders, right? How they have access to your contact list, for example. Now, does the GDPR, GDPR rules, compliance policies or frameworks of Kenya give them permission to do this? Or are they finding a way around that by just putting this in the fine print? Like, let's say if I'm a lending professional, are you allowed to go ahead and get, like, for example, you've come to borrow certain funds from us on my app, right? Am I allowed to ask you that, hey, Makabelo, I'm going to need details of your entire contact list and everybody on that list. And I also take this assurance from you or your permission in order to contact your people when you are going to default the payments. Am I allowed to do that? Like, is this how it's working?
So Mohammed, just a quick one on that. I mean, our landscape is evolving, right? So maybe GDPR started off years ago in certain markets. I think in our markets, it's still a fairly new concept. So there is a need for a lot of financial literacy around this. Now, banks, obviously, because of how they are structured, or financial institutions, this would have been at the core of how they operate and have been operating for years, right? So there's transparency around what kind of data is being received, what it is going to be used for, whether it's going to be shared with third parties or not, etc. But for fintechs, what we're seeing is this is still, it was a clear or clean space where they could do as they wished, because the regulations hadn't necessarily kicked in at that point in time, right? So if you've had a capability for a while, you've been getting away with that, you would kind of have grown in that space. But now I think it's becoming tougher because the regulations are starting to stick in. There's clarity around what's required. And at the end of the day, you do have to comply if you want to remain relevant in this space.
Wonderful. Now, I think with that, we have very well covered building globally relevant and competitive economies. Now, Michael, before we go ahead and before we move towards conclusion, help me understand what is your thought process, especially around the importance of security, right, in order for building globally relevant and competitive economies?
Thank you, Mohammed. I think security plays a very key role. I know from previous practices, security used to be the thing you bring in at the very end, similar to how you bring in compliance before you drop in a new product into market. What we're seeing now is security is being embedded into the life cycle of a product development all the way to the product maturity and keeping on with ensuring that the product stays within market. So once you have embedded security, you find that there are less headaches and you're better prepared. And you could even then have seen situations where simple changes to the user journeys actually improve the security of the application, can also help build trust. So security isn't just about setting up safeguards. It's also ensuring that those safeguards do not destroy the customer experience or the customer journey when they're using certain products. And also it's important to ensure that you're building your standards, you're using standards which of course are industry-led standards. Those are proven to work best. Always, if you have your own niche that you always move towards to, then that's great. But now that security is at the heart of the products and everything that is being done, it's now embedded. It's almost now becoming cultural to have it. So our security posture as a region has been growing quite strong. And it continues to grow as legislation supports us with the Data Protection Act and with the Cybercrime and Computer Misuse Act. Yeah.
Well, with experts like you, 40 under 40 in Kenya, I think they're doing pretty well. And I mean, your expertise is definitely, like you're always on the front, when it comes to security. And I think giving your 2 bits about it, in fact, even putting your word forward is definitely helping. I see one of our panelists is on the go right now, which clearly says that we are I think we are actually 7 minutes out of time. However, one last question before I do my concluding remarks. Makabelo, to you, what do you think are the absolute to-dos, let's say 2 points, absolute to-dos for banks and financial institutions that are drivers of change today?
Thanks, Mohammed, for that last question. So in terms of to-dos, I would say we have to do what's right for the end customer at the end of the day, right? If we're saying that we really want to drive financial inclusion, then we have to remember who we're doing it for, right? Absolutely. And as we're doing that, that means we therefore have a responsibility when it comes to financial literacy. Are these clients aware of the risks that come with innovation and the adoption of new technologies, etc.? I think that's our duty to play that role and do that right. And then secondly, I think we have to continue with partnerships. And those partnerships cut across various stakeholders, not just regulators, not just fintechs. It's a wide playing space. There's a whole world of ecosystems that we can leverage on to truly make a difference. So I would leave it at that, Mohammed.
Well, thank you so much. I mean, I think all you leaders, especially in the region in Kenya, very, very, very much think alike because, like I said, the interview with Phyllis also brought the very point up about financial literacy and most importantly, digital literacy. Because if you're talking about financial inclusion, you're thinking about getting the unbanked to the banks, you're thinking about providing them with different solutions, as a result of which you want to make sure that, everybody, it basically is the right today to have a bank account, right? At least know how to do some kind of a banking, send money to somebody somewhere, across to a different place, or, just basically get out of the cave, basically, right? And in order for that to be put in practice, I think with financial literacy, like you said, Makabelo, digital literacy becomes a very important factor as well, right? Because a lot of people I know people who are not even aware of how to handle a smartphone, right? And this is actually, we're only 10 minutes out, but if I continue to talk about it, there's going to be a topic for about 2 hours now. So let's leave it at that. But all in all, I must tell you, ladies and gentlemen, thank you so much. It was a very interesting panel. And since we're out of time, what I'm going to do is, we've received 3 questions. We're going to take these questions, email it over to you, and wait for you to come back to us with the responses. Yeah. And in conclusion, to say it all, yes, the regulatory frameworks need to be favorable in order for economies to become globally relevant and competitive. And I think especially in economies like that of Kenya, Rwanda, Ghana, the administrations are really looking forward to hear out what you have to say. And that clearly is a result why the Microsofts and the Googles of the world are looking forward to come and settle in your countries. So thank you, ladies and gentlemen, for bringing this exciting content, intensive knowledge that you guys possess and the expertise to the table. Looking forward to another panel, another day, very soon. Yeah. Thank you, Makabelo.
Thank you. Thank you, Mohammed. And thanks to the panelists as well.
Thank you, Johnson. And I'd like to especially thank you, Monicah, for bringing. I was really surprised, but thank you so much. I'm actually going to do a lot of in-depth research on that.
Thank you, Mohammed. Thank you to the panelists. Thank you for the session.
Thank you. Michael, over to you. I think up next we have Vole Adileye, but I'm going to leave that to you. Thank you for your time.
Thank you. All right, thank you, everyone. I think that was quite an interesting panel. Next up, we have a presentation on the new opportunities for business collaboration.